Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Following an initial sell-off from the US dollar, the Australian dollar rebounded and has extended since then after the US Federal Reserve said it would kick off its monetary policy tightening with a quarter percentage point to a range of 0.25% to 0.5% from the current rate of close to a zero. This is the first time since December 2018 that the US Central Bank has raised its benchmark interest rate, and from there the market has rallied. Also today we've got fresh numbers from the Australian Bureau of Statistics after the Australian unemployment rate fell to a 13.5 yearly low as the numbers came in better than it forecast, actually doubled. The figures show that unemployment jumped by 77,400 in February, that is added jobs, with the previous estimate doubled as a forecast of 36,000, and the unemployment rate fell to 4%, its lowest in over 13 years compared to 4.2% in January. With the strength coming back into play, the market now looks towards the top side of the range, which is somewhere around 73.25 or slightly higher, where the rejection area clearly was around 73.55, 65. With the market slightly buckled to the RSI and a negative MACD, I'm not supportive at these levels, and I feel the market could turn back to 72.80 and look towards 72.30 as initial support and reassess from there. Viewing the euro, the market has rallied further, and no holding back the walls as the market rallies through the level of 110, 15, 20 area, and now looks towards a recent topside rejection, which is around 111, 15, or around there to that recent rejection point from that candle. If the market does find initial supply from 110.90 to 111.15, then we could see another downturn. With the RSI buckling here and the MACD still relatively weak, let's see if the market does shy away from this level and therefore look towards 109.85 to 108.50.60 and reassess from there. The dollar yen still challenging this top side of the range, but seems to have paused somewhat since the overbought indicator from the RSI is extremely high and therefore does warrant a potential pullback or even see a bull trap. That is, the market could get trapped at these levels if we see an initial downturn. If so, the rejection from 118.95 as anticipated could see a move to 118.45 to 117.70. Well, since the divergence kicked in for the British pound, the market is still holding to a somewhat bullish case, and therefore with the RSI still relatively strong, all eyes turn to the Bank of England, where it's expected to see the third consecutive rate hike to tame inflation. That is, seeing a 25 basis point would see the rates move to around 0.75%. In light of that, the market has already cleared the level of 131.20.30 and now looks towards 132.20 as a possible target, and even may extend towards 133 if this pattern continues. Sterling Kiwi taking a pause after its bullish divergence, and it's still hovering over or mixed, but still potentially can climb towards that top side of the range, which I feel is around 194.20.50 and reassess from there. After gold's free downside weakness or bearish sentiment has rebounded off the level of 1,900 and posted a potential hammer, and therefore now looks towards the top side of 1,938. Now if it does take that level out, and do note we did get there today, then we could see an extension up towards 1,948.54. With that being said, it really depends on how strong this hammer is. Failing to get the break of 38, could see another down test because the technicals are still heavy from a daily point, and maybe seeing another re-challenge of either 1,920 and if broken towards 1,910, figure 10 that is, where it recently rejected. Finishing up with oil, I'm still viewing the market taking the challenge back to $88 a barrel and reassess from there. Weak technicals do support this view, and I feel the upside is somewhat limited in the meantime. Well, that wraps it for the day. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.